While Canara Bank is the other stock that we're going to talk about, reported a weak set of Q1 numbers. Net interest income came in at a 7-quarter low. Even gross and net NPA ratio is the lowest in 9 years. To discuss this and more, we have, of course, to discuss the impact from the RBI's draft norms, we have Satyanarayana Raju, who is the MD and CEO of Canara Bank. Mr. Raju, thanks a lot for joining in. I just want to ask you first, before asking you about your own business, what is the impact from the RBI's draft norms on your liquidity coverage ratio?
Madam, our liquidity is for existing. We are very much comfortable. We are at the range of 135 to 140. That's the existing liquidity, what we are maintaining it. What the guidelines yesterday our regulator has issued, we have assessed roughly in the morning, and it is impacting 10 to 11 basis points. I don't think that will have a problem for the Canara Bank, because even after doing all these things also we will be more than 120-125%. So I don't think it impacts our credit growth or CD ratio or anything.
So this doesn't impact your CD ratio. Got that. What is the outlook as far as loan growth is concerned? And where are you seeing for loan growth both for FY25 and FY26? What is a realistic assumption? And where are you seeing maximum traction coming from?
So last time also I shared with you, all of you, though we are given the 10% credit growth in our guidance, we may grow 11 to 12%. That's what actually we have communicated, and we stand by that. And in the first quarter, you just look at that, we are almost grown at 10%, even after shedding a 22,000 crores corporate loans which are at lower yielding. That's the exercise we are doing for the last 2 quarters. Previous March also we did around 20,000 crores, and the June also we completed that 22,000 crores. With this, that exercise is completed, and we don't have any corporate exposure below the 7.5%. So we will taken care of the yield on the corporate. Now corporate yield has improved to 8.29%. This is very well placed in that. So now that shows that the even traction in the corporate also is good enough for us. But our earlier guidance is we want to keep our RAM at 58% and corporate at 42%. That's why always we are focusing more on the RAM sector. And you see that from the year on year, last year June it was RAM was 55%. This year it is now June 57%. We are almost reaching to what we have kept the target. And now the next 3 quarters, I can see that the corporate credit, we are ensured shedding of 22,000 crores, means almost we have dispersed 40,000 crores in the first quarter itself. If you have to disperse 40,000 crores, the sanction should be more than 50,000 crores. That's the traction we have even in the corporate. And the RAM sector, we have taken its retail as our driving force, because there you will get a higher returns. And to strengthen that retail, what we have done is, because our strength is our gold loan, we have introduced a new retail loan for the metropolitan city branches at a higher rate of interest. That has helped in the first quarter, that in 1 quarter we have grown retail at 12.39%. Year on year, if you see that the growth retail is now first time in the history of the Canara Bank, we grown at 23%. Of course, slightly it is impacting our agriculture growth, because we have stopped lending in the metropolitan city in the gold loans against for the agriculture purpose. And in the corporate, the traction what we are seeing is, earlier also I shared that infrastructure anyhow it is there. Then that the solar energy, more proposals are coming. But because we have taken enough exposures, we are little selective in that. And data center creation is one of the areas where we are getting it very high. But the NBFC, what we have shed most of these corporate loans for central public sector undertakings and all is all fallen in the NBFC. So our NBFC exposure has come down drastically. That's from 144,800 to 118,500. That's almost 26,000, 27,000 crores reduction in the outstanding. So we have a cushion to lend to the even NBFC to some extent. So these are all the cases, but we are selective and we don't want to compromise on the returns. In the MSME, whatever the budget has given to us in the clue for that the MSME lending should be in the internal rating, not on the based on the balance sheet or even the risk rating, it is in the external rating. Actually, this particular issue we are already implemented in our Canara Bank for last 1.5 years. We are working for the last 3 years in this to segregate the lending to the MSME from the regular way of risk rating. That's why this first quarter you can see that our MSME also has grown at 2.42%. We are expecting that there also traction will be there and we can do better.
Okay, all right. Hi, sir. Morning. Given that there is, so to call it, a scramble for deposits and the competitive intensity as well is getting a little bit more difficult, how do you see this panning out? And are the yields, enough to offset that? Keeping both those two together, what is the outlook on NIMs from here on?
So first let me speak about the deposits. In the last year also, if we verify that, our bank has grown in the double digit, whereas none of the peer banks could show that double digit growth in the deposit. And this first quarter also, we have seen year on year the growth is more than 11%. The reason behind is this liquidity crunch or the market problem. This we could assess initially in the first month itself in the last financial year. So we have taken this deposit mobilization as a critical point for us. If you see our retail term deposits, first time in the last 5 years, we have grown more than 10% for that. Even in the first quarter also, we have grown 2.63 for that. The savings regarding the CASA, definitely there is a tough fight is there on that. But savings cost, we are absolute numbers, actually we have grown actually in the savings individuals because of our innovative products, so unique products and the services, innovative services what we offered. Savings bank has grown in absolute numbers. In individuals, it's almost near to the 20,000 crores. But in savings bank, again, there are institutional deposits which are draining out because of the central government policy of SNA system, single nodal agency and all. That's going out of the system. That is being compensated with growth in the savings bank individuals. That's why in absolute numbers, the growth is reflecting is only 12,000 crores in the savings. CASA current account, though we are growing steadily in that, maybe a little slow. But the last March, we got a windfall from one central government where we are the bankers for them, some 15,000 crores. That 15,000 crores has converted into bulk deposit in the first week of April. That even that's a 15,000 if you leave it. In the first quarter on quarter, you see that the difference is only 11,000. That means cumulative we have grown in the first quarter also CASA 4,000 crores. So we have focused on that. We will continue to focus on that. Even this year, though we are given the guidance at 9%, we grow at 10%. Regarding the NIMs, what you are asked, this NIM also what we have expected, that's we have given the guidance. That is the reason in the last quarter when we are announcing the results itself, we are given for this financial year guidance at 2.9, but we are hopeful and confident that we can reach around 2.95. That's what we communicated earlier. And we stand by that, and that's the proved. We have assessed correctly what is our balance sheet position, what is the market conditions. Because the first quarter, the cost of deposit still continuing at very high. Because to meet the credit growth in the last 2 quarters of previous financial years, banks have raised more deposits at high cost. That will impact for this first or second quarters. That's why first or second quarters, the NIMs will be comparatively little lower.
All right, we'll leave it there, sir. Thank you very much. It's great listening to your perspective and detailed explanation as far as Canara Bank and, of course, the industry right now.